Hey guys, are mortgage interest rates at record highs? Well, I'm going to answer that question in just a minute. So why did I make this video about are mortgage interest rates at record highs? Well, I was inspired by a news story I saw. And I saw this news story that said 52% of people think mortgage interest rates are at an all-time high. And I thought that was interesting. And so let me address that question. Spoiler alert right out of the gate, they are not. I knew that because when I got in the industry in 1994, rates were higher. At least that's the way I thought I remembered it. I went back and looked, and sure enough, they were. In 1994, I think the average yearly rate was about 8.3%. I've got on my computer screen here some of the kind of the past 30 plus years. Actually, I went back 35 years because if I go back to 1990, they were 10.32%. So the fact that today's mortgage interest rate is about 6.8% puts it in some perspective. Rates not only have been higher, they ran on average higher than they are even right now for quite a while. So I'm going to give you kind of the history, recent history. I'm not going back 50 or 100 years. I don't even know how long they've been doing mortgage interest rates and mortgages, but since I've been in the industry, I'm going to go back and kind of give you some rough averages. So like I said, when I started in 94, they were over 8. They were kind of bouncing around between 7.5% to 8% for a few years. As we got into the 2000s, the aughts as people call it, rates started kind of progressively dropping, but I can still look in here and see, 8%, 7%, 6.5%, 5.83 for 2003, 5.84 for 2004. So that's kind of what was happening through the 2000s. I'm looking at 06 was 6.41%. So the rates were actually kind of in the range. Looks like 03 through 05 were in the higher fives. So a little lower than what they are now. Again, we're at 6.8% right now. But they look like they were kind of in that range too in the 2000s, maybe a little bit less. A little bit of background on what happened in the last few years with interest rates. Or I should back up to the Great Recession. So we had the banking crash of 2008, which was also kind of a home building, housing crash in general, because it all happened with the mortgages, right? You may or may not have heard about how that all went down, but the way they were doing mortgages and all that stuff ended up failing, and it kind of practically brought down the whole economy of the United States and a lot of other countries. And so after that happened, we went into a recession, what they now call the Great Recession, where we went from this super hot economy in the US to things really cooled off. A lot of that was driven by the fact that housing is one of the biggest industries in the United States. And so they started lowering interest rates to try to stimulate the economy. And so rates started to progressively drop over the years until we got into this weird period just before COVID where rates were getting down to 3%. I think one year here we've got 2021, 2.8 something percent. I don't have my glasses on, so I can't see it. Little half comedy hour here, but for those of you that are in your 50s, this is a problem. So anyways, we had rates, in the 2.9% range. I can remember having customers that were building homes with us, the kind of builds that we do. If they're not paying cash, they're getting a construction loan. And then when the house is done, they refinance into their 15-year or 30-year mortgage. And I would hear these customers talk about, I got 2.85%, which blew my mind, right? In all my years of doing this, nobody got mortgage interest rates in the 2s. And so what really happened there was we got down into this artificially low interest rate situation. And when that goes on for a while, it becomes the new normal, right? We all use that term when things are bad. Hey, this is the new normal that gas prices are at $5 a gallon or whatever they are. Well, mortgage interest rates got so low and stayed that way for a while that people got used to it. And if you were somebody that wasn't even paying attention to interest rates, maybe you're coming of age where you're ready to buy a house and you're starting to look at mortgage interest rates now. You're seeing these rates Maybe you don't know any better, but you're like, hey, 3% sounds good, you know, and it is. And so people are out buying homes and these rates are getting these fantastic rates. And then we have this unique scenario of the COVID pandemic. So then in COVID, we had these supply and demand economics that changed things. We had a situation where demand was still pretty high, but supply was getting lower. Why was that happening? Because COVID was shutting everything down. It was shutting entire countries down, and it was definitely, even in the United States, slowing down production. You know, you heard it every week. Well, this plant had COVID in it, so everybody got sent home. Or in the case of lumber plants, I would hear that they went to half staff. They were putting out a quarter of the production that they were, or half the production they were. And at some point you start running out of the supply and you still have the demand. That's never a good thing for inflation because things start to get more expensive, right? And so that was happening, I think, first with building materials. I feel like we saw the inflation first before it got to the grocery store and everywhere else. But ultimately, it did get to everywhere else, right? So what started happening is the economy started having all this inflation, and the Federal Reserve started raising interest rates to cool off the inflation. That's their tool to cool off inflation. So rates started going up. That drove up mortgage interest rates. So we went from people getting rates in the twos, the high twos, to at one point I think it jumped up into the eights. You know, mortgage interest rates in the 8% range. That is a huge swing. You know, from 3% to 8% is what, a 5% point swing? That, and I'll show you in a minute what that does to payments and the amount of interest you pay back. It's pretty huge. Rates now have settled down to that, 6.8% range, and they'll probably come down a little less. I've gotten out of the forecasting game, especially when it comes to mortgage rates. So that's kind of the history of rates, where they had been, how they dropped so low, and why they ratcheted back up. We're in a place right now where they're a lot higher than they were in those wonderful days of 3% interest rates, but that was artificially low. I think we're in a kind of a normal range right now. So when it comes to borrowing money for a house, I think these are pretty typical rates that we're going to see. Will they drop a little bit? Sure, maybe. I wouldn't wait around on it though, because inflation keeps happening. So if it's a battle between, do I wait to buy or build a house because I want to see if rates are going to drop? I would say don't do that, because rates are in a decent range right now and inflation's just going to go up. You wait a year, we may have had some other event that caused materials to go up that much more, and the house is just that much more expensive. The other thing about interest rates that's great is if we ever do have that weird situation where they drop really low again, you can always refinance, right? You can't change the fact that a year from now or 2 years from now, a house is going to cost more. It just is. Inflation is always happening. It is not going to be cheaper to build a house a year from now than it is today. But you could get a rate at 6.75% today, and maybe 3 years from now, we have some weird event and the rates drop to 4%. At that point, it makes sense to refinance, and that will make a big difference on, your monthly payment and what you pay back. Speaking of monthly payment, I'm going to do a section here on that. I'm going to put some examples of if we borrowed X amount of money and what these different interest rates do to your payment, to what you pay back a loan over the course of 30 years. Okay, so up on my screen here, I put a loan amount in a couple loan calculators at different interest rates, same loan amount. $1 million, that I understand if you're watching this, that may be way more than you plan on borrowing. A lot of our clients do borrow that much money. Some cases you may be borrowing a fraction of that. It's the same principle either way. These bigger numbers do help show bigger differences, and so I like it from that standpoint. So $1 million that you have gotten on a 30-year fixed mortgage, which means you're going to make 360 payments. So let's say you're one of these people that I'm going to die in this home. They're going to have to pull me out of this thing when I'm gone. That means you're making 360 payments. You've got a fixed mortgage interest rate. So when I reference monthly payments here, that's principal and interest only. That stays the same. Your taxes and insurance can vary over the years, and depending on the state you're in, it can be different how that works. But I'm going to start with $1 million for 30 years at a 3% interest rate. So this interest rate that we had as an average in 2021, the glory years of interest rates, that would be a monthly payment of $4,216. I'm not going to get into the pennies. $4,216 is your monthly payment. The really interesting thing is the total interest you'll pay if you made 360 payments, 30 years of payments, you'll pay $517,774 in interest. That's how much interest the people that loaned you the money make on that, right? Your total payback, if you borrowed $1 million, will be $1,517,774. So I always joke with people, don't look at the total payback when it comes to a mortgage because it'll make you cry, but that's reality if you made 30 years worth of payments. Now here's where it gets really interesting. Let's go to more or less today's rate. I'm rounding up to 7%. We're at 6.8 right now. Rounding up to 7. So $1 million for 30 years, you're making 360 payments at 7%. Your monthly payment is now $6,653 a month. Pretty substantial difference, a couple grand or so. The total interest payback is where it gets really interesting. Now you are paying back in interest only $1,395,000 and $88. So $1.4 million, let's say. That means your total payback if you borrow $1 million at 70% for 30 years is $2,395,088. So almost $2.4 million you will pay back. Again, this is the part where I say best just not to look at these numbers. I joke, of course, but hey, that's what happens when we borrow this kind of money, right? What I'm trying to show you there, though, is the huge difference between, what is that, 4 percentage points? And hey, that's 4 percentage points that we're dealing with. Just back in 2021, you could get 3% if you had good credit. Now you're probably getting closer to 7. So the ramifications of this is you can afford less, or you're going to spend a lot more to borrow the same amount of money, however you want to look at it. I'm sure this rate increase knocked a lot of people out of being able to even buy a house or what they thought they could buy. For other people, it had them ratchet down what they thought they could buy, because now a home they might have been able to afford at this price point, they needed to come down to a different price point. So it's not good. None of us want rates to go up. You know, as somebody in this business, you wish rates were super low all the time. Same as, you know, me just being somebody who's bought homes before, bought cars, bought, you know, motorcycles. You always want low interest rates, but the reality is they can't always be at 3% and they won't always be at that. I feel like where rates are is probably pretty typical and what we should plan for. So this is something where, you know, pay attention to mortgage rates. If we get this unique scenario where they do drop substantially, you could always refinance. Guys, I hope this video was helpful. I'm not trying to be the financial guy, guru who does macroeconomics. I am staying in my wheelhouse, which I have been a home builder for 30 years. I know a little bit about mortgage interest rates, so when I see a story like this, it kind of inspired me to do a video. So I hope this helps you guys out there. I am not trying to also be the pro's pro or the builder's builder and drill down onto a lot of, you know, minutia about home building. These videos are for people out there that hopefully it will help you if you're trying to buy a home, build a home. If you don't mind, hit the subscribe button if you have a YouTube account and hit like. I'm trying to grow this channel and get these videos out to more people. So doing that will help us a lot. If you are in the Dallas-Fort Worth area, can't talk, Dallas-Fort Worth area, and you're thinking about moving here, certainly look us up. Legacy Classic Homes in Dallas-Fort Worth. Appreciate it. You guys take care.